The business of litigation funding is expanding rapidly. Working with both large and small funding firms, more and more investors are pouring more capital into the funding of litigation expenses. There are two significant reasons for this trend that are often overlooked. First, investments in litigation have economic characteristics that make them attractive to investors seeking diversification. Second, investors can reliably use quantitative analysis to identify the most promising cases in which to invest. When investors want to diversify their investment portfolio, they often look for assets whose value is not tied directly to the performance of the economy as a whole. In other words, investors want to find uncorrelated assets, those whose value can rise or at least remain stable while overall economic performance is down. Investments in litigation fill this bill. As one executive at a litigation funding firm put it, "What attracted me to the space as an investor from my corporate finance background was really first and foremost the uncorrelated nature of this asset class. Wow, here's something where it doesn't matter what the market does or what commodity prices do or what interest rates do. The return associated with my investment in a legal claim is really operating inside of this courtroom vacuum." This quality makes litigation claims attractive to institutional investors, including state and municipal pension funds, nonprofit foundations, university endowments, large asset managers. Because they're interested in litigation claims for their uncorrelated nature, they're not looking for spectacular quarterly performance, nor are they interested in the performance of any particular litigation. What counts for them is the overall performance of the basket of litigation assets that a particular litigation funding company has. This means that individual cases are insulated from investor scrutiny. One funder explains, "None of our investors have access to specific invested cases, unless that information is public anyway." He added, "You could not see any information that would allow you to deduce that we had made an investment in case X." Another reason for investor interest in litigation claims is that they can be effectively analyzed through quantitative means. Many litigation funding companies employ algorithms to identify legal claims with the best chance of providing a substantial return. As one funder puts it, so the algorithm will look for natural language strings, for instance, of cases which we like to fund. Language strings such as breach of contract, breach of fiduciary duty, or antitrust. The algorithm will also look for quantitative metrics. We like to invest in cases that have highly quantified damages. A damage amount quantified in the complaint in excess of, let's say, $3 million would give you a boost in the score. Who represents the plaintiff case can also boost your score. Is it a highly reputable law firm? Is it an AmLaw 200 or an AmLaw 100 firm? This kind of objective foundation can be reassuring to institutional investors who want to justify their investment decisions. If you need help with litigation funding, call or email me today.